A sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Insights time. I hope everything is working as planned. I don't have this strong routine anymore to cover this live streams, even if I love to do it. But I assume it looks good. Let me quickly check if the sound is working. Yeah, okay, perfect. Okay, couldn't work better actually. I'm kind of surprised that it's working that well. Guys, thank you very much again for joining the stream. This new episode of A Sense of Capital, Live Earnings. Your host of the day, as always, is Julian. I'm very glad to have you in, guys. And yes, today we will cover a Dutch company, a company from Almere, headquartered in Almere in Flevoland, an unnatural island. And what is Alfen doing? Alfen is basically a provider of different kind of energy grid software solutions, hardware solutions, basically to enhance the infrastructure with the high focus on Europe. And today we will cover the Q4 earnings release, or basically the full year earnings release 2024. But before we jump into a quick introduction to the company, for those of you who are not familiar about this company, because actually even here in Germany, which is the neighbor country of Netherlands, almost nobody very likely is aware of this company. And even in the Netherlands itself, I assume that not that many know Alfen. However, guys, quick disclaimer, as always, in the upcoming minutes, this will not be financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data, so make always sure to do your own due diligence, especially if you are confronted with a Julian, your host of today, in kind of a rush situation and not perfectly prepared. However, guys, okay, let's jump in, and what we can see here is the official website of Alfen. And you can see here the electricity grid of the future. And you can see already the major three product lines, major income pillars. So the legacy business, and you need to know that Alfen was founded in 1937 actually. So yeah, almost 100 years old. So quite a legacy business. But a lot of this is funded on substations. You can see it here, larger ones, smaller ones. Then we have this second newest business, which came around 2010, 2015, something like this. And these are the EV chargers for the public sector, but as well for the private customers. And the newest baby, the former rising star, because it's not rising that heavily anymore, are the energy storage systems, which are mobile and stationary ones. So we jump in and maybe get a better feeling about the solutions itself. You can see you need to know that, I know it's in other continents as well the case, but especially in Germany, there's huge upside potential, development potential in terms of making the electrical grid more stable. And for this you need a lot of kind of substations. You can see compact ones, walk-in stations where you really as a human can enter it, for instance, or even customized ones. Yeah. Then we have this EV charging solutions, and you can see, I think that are the most self-explained solutions they are offering, because nowadays basically you can see electrical vehicles everywhere. Yes, they are not that present like some experts in the past expected, and even Alfen expected actually, but yes, the demand is growing actually. And competition in the space as well. A lot of vendors of EVs from China or from Asia coming. Even Korea stepping up their game in this regard, like Hyundai. And so it's getting better and better. You can see they offer very simple EV charging solutions, primarily for the private sector, but as well a more complex one in the public area, or which you can utilize as a company to grant your staff always a fully charged car, basically when they left their shift. Yes, and so let's go on. And now we go to the energy storage part. Again, the newest business, and a very, very competitive one. I mean, they are not only vendors of EVs out of Asia and specifically out of China, but as well many of those, a lot of competitors in the energy storage space, ESS space, as well from China, and producing quite cheap and efficient their solutions under good circumstances. I mean, human and health, security, environmental aspects, I'm not 100% sure. That's not my part to judge about it. But at least I think the production lines are quite efficient. However, you can see they have this mobile solutions which you can utilize for construction sites, or for festivals, for instance, for all this kind of purposes and occasions where local grid can't supply power, or not stable power, as well. Like for the movie festival in Cannes in France, it was utilized to charge the EV cars, the BMW, big BMW cars for transporting the celebrities from A to B. They're getting charged as well with those mobile battery storage systems, in combination of course with EV chargers. And then we have the stationary ones for larger projects, for sustainable business, basically long-lasting purposes, like you can see it here, for wind farms, solar farms, and this kind of purposes, basically. Yeah. So that is already it when we talk about the major income sources of Alfen. Let me quickly check if I can. Okay, so now I can here and there check as well the chat if something should going on. Okay, let's move back, share the screen, and just giving a little bit more information about it. I think now it's 6:55 CT, so in Europe or in Germany at least, and it must be 12:55 Eastern time, so in the US, at least part of the US. So, and the plan was to announce the results by Alfen in 5 minutes. I assume they're always a bit late, but they will a little bit early announce it, very likely here in the news section. So we keep both updated, as you can see here. At the moment, nothing is released. As soon we have access to the presentation or there's some news, we will check it out. However, talking about the market cap, quite small, 310 million US dollars, or enterprise value. So considering the debt and cash level, you can see the ratio is not that healthy, and actually Alfen is confronted with huge issues. If you are a little bit aware about the company, I think you are knowledgeable about the situation. However, so enterprise value is almost 400 million US dollars. You can see the development of the price in the past 5 years. So it rised very, very strongly in 2020. Basically, interest rates, key rates, or by the European Central Bank, have been quite low, and so people have been leveraging investments, no matter if it's like heavy capital intense products in wind industry, for instance, and they utilize again those batteries, for instance, or substations as well, or like private people for EV chargers. So the demand was growing, and again in general the sustainable, eco-friendly wave and demand was increasing. Yeah, it was almost like a hype, and then it dropped basically simultaneously to the interest rate, how it developed. As you can see here, it grow, and then it dropped. So as soon as interest rate increased, basically the demand of their solutions decreased, or their sales, yeah. And then there was actually a way heavier drop in June. Why was this the case? I mean, you can see here that was the news, 26th of June. Alfen decides to adjust 2024 guidance and reassesses midterm objectives. And for those of you who covering and follow me around the past quarters, and I think it's the 4th or 5th or 6th time I cover Alfen, at least a year, you know that I'm always struggling a bit with being a shareholder of this company. Somehow I don't want to be emotional when it's about when we talk about investing, and I assume that's not a good idea to be emotional. But somehow I like the company and I see so much potential. I mean, it's my European bet. I would not bet in every country in the world or every continent in the world on sustainable solutions like the product portfolio of Alfen. But in Europe, it was at least very strong, prioritized, and on the map of a lot of governments, nations, and in the minds of people. But maybe that changed a bit in the past. They are in TD. Oh, TD is, you can see my stream here, double. But he told they are in, so let's check out what is going on. And yes, you are right. So actually, then very quickly, I always a little bit more, I waste too much time sometimes about introducing the stuff, but we would like to see, I mean, major numbers, that's not that complicated for today. You can see we will check them out together later, but guidance is we want to see this 485 million euros for the full year. We want to see 32 in EV chargers for this quarter, 63 in substations, and a bit better than EV chargers, 35 million euros in energy storage systems. And we want to see, even if it seems very, very low, but that's at least a target to cover full year adjusted expectations, 3 million adjusted EBITDA basically. And yes, today very likely we will get some numbers about the midterm objectives. As you can see here, I already prepared it. Maybe about the adjusted gross margins of the different product types and about the backlog of energy storage systems. But let's see. Okay, one more time. 3 million adjusted EBITDA. Let's say 483 revenue for full year, 32 EV chargers, 63 substations, 35 energy storage systems. Okay, guys, give me one more sip of water. Being prepared for a huge mental hit as always in the past quarters, most of the time at least, but maybe they surprise. So let's check it out. Okay, we got it here. 487, or let's say 488, if we make it a little bit more clear, that is actually already very, very good. Dividend was 5.8%. Yeah, obviously it decreased. Obviously as well the revenue decreased, but at the end it's a bit higher than expected for today. That is what I can tell you. Positive cash flow, at least that's a good sign as well. We go later into the details. So far so good. Okay, we will see some information about the strategic focuses, and I like to see it. Full year outlook. Okay, so we see a minor year-on-year revenue growth at least based on the outlook. We will check out in a moment. Oh, I don't think we will see it actually. We don't see it. I mean, yes, when we check the top line, potential growth, yeah, there might be some upside, but look how wide the range is. It's 60 million actually. So the mid one is 475 million. So it's actually a bit lower than this year. so the expectation for 2025, and actually that's not good at all actually. Oh god. It goes on. Okay, and midterm guidance as well. Growth rate beyond. Okay. That might get very intense. I can tell you. I mean, you can see the presentation is online, and from my perspective, just on the first glance, okay, the fourth quarter very likely was okay, but it seems like the expectations are very, very low for 2025, 2026, and 2027, especially for 2025. Keeping in mind what was originally the 2027 midterm guidance. But guys, let's check out what is going on. And honestly, I like if they would just simply sand back a bit. And I can tell you in the past, they never have been very accurate with their outlooks, no matter if it was too high or sometimes too low. Yeah, so maybe now it's too low and we will see what is going on. However, I can't imagine that so far what I've seen that the price is looking that well. But let's see. Basically the impact on the price of the stock. Okay, we already see a bit of this. This is where we don't take care of it. Sustainability statement is maybe very important, but not for this call. We straight jump into the different revenue streams in the different pillars, and starting with the smart grid revenue. And with smart grid, they're talking about substations, EV chargers, and energy storage systems. Okay, good, we got it. So we start with the substations. Substations, again, is their legacy business, and regularly I'm not that afraid that something goes bad in this direction because demand is growing. They announced some news that, for instance, one of the largest grid providers, Nexus in the Netherlands, they are ordering a lot, or they have some major framework agreement with Alfen. You can see here they need to distribute 800 new transport substations or substations in the future, and so the demand is very, very strong, not only for Nexus, for other Dutch electrical grid providers as well. You can see 120 new stations per year is the target for Alfen. So I see demand rising, and so therefore let's go back and check out what happened in the past year. Target was that they reached the target of, I'm not sure, it was a high number per week of produced substations, and I assume they make it happen, but let's see. So again, at least a growth 2023 to 2024. You need to know they had kind of a drop, a gap in right in between of the business year 2024 because of difficulties with one of their product types and substations, and with this kind of houses are made out of concrete, and they get provided by an external supplier, and as well they couldn't adjust that quickly to the situation and produce more and more. And yes, I mean the supply chain, it was a bit challenging, let's say like this, in terms of the supply chain. Okay, however, we have now 210.6 million for euros for the full year. So let's going back and enter this already. We have substations. They always change the color, so don't get confused. But you can see I want to see 63. It's actually 67. And so we are higher than expected, 2% higher. So that's already something very good, but let's see the details, what they added to it in terms of information, if there's anything necessary. Okay, so year-on-year growth, all right. Grid operator, that is what I mentioned with this Nexus story here. From private domain, okay, you can see the share. So quite diversified, and that is nice to see. Cross margin is 15.5%, and adjusted gross margin was 22.8%. And maybe here we can go back, and you can see the adjusted gross margin of substations. Can you see it? One moment. So I think that looks good. You can see in Q2 it was 27%, Q1 27%, and now they're talking about 22.8% about of the full year. So actually that's not that looking great in terms of efficiency. But again, keep in mind they had some challenges. There's some issues with it in terms of supply, in terms of production, adjusting the solutions, redeveloping them a bit. So it's not that surprising. There is some kind of impact on the profitability, and therefore the margins. Okay. However, so you can see 3,500 substations, 3,000 in the Netherlands and 566 in Finland. So I mean, EV chargers getting distributed across a lot of countries. Then energy storage systems as well, about a few hundreds, but a lower number of countries than compared to EV chargers. And substations is quite a focused business, as you can see here, Finland and Netherlands in this case. So they are very impacted and affected by the demand in the Netherlands, but at least it's huge. That's a good sign. Commercial win. One of the significant commercial wins with this year was implementing a medium voltage microgrid for a sustainable greenhouse with Lean Middelburg. Okay. Innovation. We changed the way we deliver our relatively new transport distribution station to access, including our modular approach to the manufacturing process, as well as our additional role as an end-to-end contractor. And yes, I mean, they mention here due to the fact how they cooperate with N-Access and how they prepare the substations in their factory. Later on, they can install it way quicker, connect all the wires to it, and that is definitely enhancing as well, I think, their reputation in the business partnership, and I assume that results in a happy customer situation. So, however, I mean, it's a small beat, as I mentioned, small beat by 2%, and in case of Alfen, I will grant this a yellow rating. I mean, it's not super fantastic or whatsoever. You can see it here. Later with the color, I think it's more clear. However, I'm already starting to give it a rating. And yeah, for substation, small beat, but I expected a small beat, honestly. If it would just cover expectations or even miss them, immediately for me bad. So it's a neutral rating, not that surprising, but glad to see that this is working well so far. Okay, coming to the next product type, and those are the EV chargers, which again experienced huge demand 2020, 2021, 2022, even 2023, but then 2023, end of the year, 2024, getting lower and lower. And you can see here, at least they covered a small growth from year to year. So 153.3 million US dollars. Going back, entering it. 53.3. Is it correct? 53.3. And so again, expectation was 32. So it was 40, and it's a beat by 5% compared to the expectations of this product line. And actually that is quite surprising. That is what I can immediately mark in green, and I assume that means that wait, I think we use another green here for the rating. I assume that means that yeah, I mean EV sales getting up again. The product portfolio in general, the competition in the sector of selling those cars increasing, getting more heavy, prices getting cheaper, even though if subsidiaries are not that accessible anymore, by or fundings or something like this. So governmental support basically for especially private owners. But however, the solution itself getting more and more developed, and more cars and different kind of cars are covering expectations, I assume, of the market, and this as well getting displayed by those numbers. So let's see what the details stating. Growth compared, Alfen produced approximately a lot of EV chargers. Lower number, you can see lower number than 2023, but likely that the price per charger is getting higher, or they're selling more of more premium touched or colored products actually. Gross margin for EV charging was 31% compared to 38.3% in 2023. Yeah, so more revenue, but on the other hand, not that much profit is sticking at the end of the year. But they tell you, look here, one-off provision for obsolete inventory. Yeah. However, it is how it is. Here we can go back again and take a look on the targets. And the target was originally, in terms of EV chargers, yes, 83%. So with 31 point, you can see it here, with 31.5%, I think it's not that convincing. However, let's go on. Amounted to, which is lower than okay, adjust gross margin. Okay, it's the adjusted one. Okay, nice to see, which is lower than expected due to initial recognition of January warranty provision of 4.0 million euros. Okay, but it's a bit higher than expected. That's great to see. Honestly. Commercial min, we will continue to deliver twins for the municipality of Groningen until at least, Groningen is a state, basically a region in the Netherlands, until at least 2027 with our partner Heijmans Innovation introduced our Twin 5 Plus with LED display on dynamic QR codes. Yeah, actually I'm a bit wondering, maybe you have an idea, but they announced, they publicated some kind of new charger, and it was not another type of AC charger or something like this. And I mean, this product innovation is not available anymore as far as I can see it. Not sure if I'm missing something, but not sure what is going on, but I'm quite sure for those of you who have time to invest in checking out the call, you will get new information. And especially, I mean, they have an annual report, which we will not cover today. It already takes now quite some time to go through it, but annual report, I only can recommend you to screen it by yourself with whatever, what good drink or whatever, and hopefully it's a joy. But let's see. Okay, let's see. They added some additional information, I think, in terms of the EV chargers. Alfen kept stable revenue, market share remained similar in difficult years across the board for EV charging. Yeah, and that is, you can see it here, and that's part of the truth. I mean, even some of the vendors of those solutions getting completely broke, getting acquired by others. In general, sustainability companies like Enphase, for instance, yeah, or solar panel providers, they are confronted with definitely some hiccups and some serious challenges in terms of demand. And so far, yes, Alfen is not growing, and it's not growing close on the level it grew in the past years before, but at least it stayed more or less stable. And I mean, if this chart is correct, you can see compared to the peers, so to other providers of EV charger solutions in Europe, the sales stayed quite stable actually. You can see they are in a leading position. Registrations gained market share in the top 4 countries: Netherlands, Belgium, Germany, grüß Gott, and France. slightly lost market share, great also at the top 4 countries. Okay, but it's nice to see, because just Germany already, I think the sales of EVs decreased from 2024 or from 2023 to 2024, which is understandable, of course, but it's kind of crazy as well. And only if Germany, which is quite a large country in Europe at least, the demand is rising, and it's a car country, as you know, the impact on EV chargers might be very, very strong. Yeah, but on the other hand, we are waiting for this kind of momentum which getting established since quarters. Yeah, so even I, as a quite loyal investor, and as an investor who wants to grant the companies I'm invested in time to develop and even achieve a turnaround, like in case of Alfen. Difficult to see actually, and difficult to stay patient. However, we have a neutral rated sector with substations. We have a positive one with EV chargers, and now we come to energy storage systems. And would surprise me if that's not the case, but I assume they didn't even achieve the target of Q4. Yeah. However, we will see it. So show 24% revenue decline, close to 20% guided revenue decline. So you can see higher than expected, 4% higher than expected, and they already adjusted it. Yeah, and this information of 24% decline, I assume, was not announced 1 year ago or something like this, more like a few months ago, half a year ago or something like this. So this negative development seems to go on. However, we copied the 123.7 million euros in our sheet. 123.7. Let me check if that's the right number. It is. And now comparing what was expected, I want to see 35 million and it's just 28. So yes, substations and especially EV chargers achieved a beat, but you can see on the other hand 5% miss compared to the expectations. Yeah, so therefore not that strongly compelling, but overall actually we cover exactly the guided 483 million euros. Yeah, so you can see full year no, that's not, but you can see it here, 483. It was before 483 and it's again 483. Wait, is it? Okay, wait. We need to do it like this. And it's 488. Wait, I can show it to you as well. So actually a small beat. So we got it here. Of yeah, 1%. Let's keep it as 1% beat. Yeah. However, when we rate energy storage systems, there are not two opinions in my perspective which fit. Only one, and that is a negative rating. However, overall neutral rating. Yes, the target wasn't high. That's the truth. But on the other hand, they are confronted with challenges, with serious challenges, and that energy storage systems is not working that well. Okay, I understand. It's depending on some big projects. Look, guys, I can share with you. They announced the news. Here, Alfen signs agreement with Flevo BES to build one of the Netherlands' first large-scale 4-hour battery energy storage systems. You can see 126.4 megawatt hours so which is quite a lot. I mean, that are roughly, I think, 21 of those containers, as you can see here, stuffed with energy cells, with battery cells. And they even, it's part of the agreement, as far as I understand, to extend it to 204 million by 2028. And the management stated in the recent earnings call that there are, in Q4 last year, very likely 2 decisions will get made about 2 large projects in the Netherlands. That is one. Not sure if they lost the other one. Might be the case. Maybe the decision is a little bit postponed. However, at least one they won, and I mean, that's a multi-million euro deal, and this can already have a huge impact on the performance in terms of energy storage systems, in terms of sales. But on the other hand, I mean, we have already seen the guidance, and it's not looking that attractive. So let's see. I mean, best case, we go on and we check just the details. But so far, at least the revenue for this quarter and for the full year is, for me, on a yellow level, but just, of course, considering the adjusted guidance which happened through the year. Okay, we have the decline compared to 2023. We have the gross margins increased to 29% compared to 24% in 2023. Actually, okay, that's not that bad. I mean, it's a very competitive sector. Products are not that divergent from one supplier or from one vendor to each other. A lot of them, let's keep it simple. Hopefully, I'm not spreading wrong information, but a lot of them purchasing the battery cells from CATL, CATL, for instance, a provider and producer of those, putting in some kind of case, housing, yeah. Putting in the software some specific elements, maybe utilizing them a bit different, but the cells itself are not produced by Alfen. Yeah, they are purchased externally, and others are purchasing those cells as well. So, and there are good providers of cells as well outside, besides CATL, basically. I assume, especially from China, and I assume, or I expect, that in this sector, price matters very heavily. However, okay, unadjusted gross margin is 27.6%. Here we have this deal, what was already mentioned. I hope the other one, they get a win too, but I assume that will be a topic as well tomorrow in the call, because if there's another big project which they maybe lost, might have a negative impact. We adapted the Elements battery system to fit in 20 feet container, enhancing cost competitiveness, capacity density, and system integration. Okay, great to hear. However, yeah, so I mean, let me quickly copy the margins, the adjusted gross margin. So it was here 22.8%. I got the table, 2.8%. Then we have a bit down for EV chargers, and again, don't getting irritated by the colors. We're talking about 36.1%, 36.1. And now we have here energy storage systems, the most challenged product type, I would say. And here we're talking about 29.1%. 29.1, back to the table, 29.1. Okay. And I mean, look, it's nonsense to do it like this, actually. It's not accurate, but at least we have a number. However, you can see on the first glance that in almost every product type direction beside energy storage systems, which is very, very surprising for me, we can't cover the original targets. Yeah. I mean, it's for full year, so it's not just Q4. Yeah, I will quickly adjust it. But look, so I have no other choice to basically color this in red and this in green, if I'm not mistaken. And so overall, let's color it in yellow to red. Yellow to red, but I put it on red because at the end, look guys, I mean, sales on substations and EV chargers getting stronger and stronger, or let's say revenue. How much revenue was it in terms of energy storage systems? 124, substations 211, and EV chargers 153. Yeah, so those are the strongest product types in terms of or product lines or streams in terms of turnover. And if here the margins are not that great, I mean, then I need to consider it. And if I'm standing between red, so a negative and a neutral rating in this regard, the negative rating is a bit heavier. Yes. So overall, we have one red and one yellow stated result. Before we go on, rated result, sorry. Before we go on, we quickly jump. Backlog will be very interesting, actually. Look, we cover first backlog. Backlog is so interesting in terms of energy storage systems. Alfen sees growing backlog in revenue over past 3 quarters, where battery price decline limits revenue growth. Yeah, because basically competition is getting heavier and heavier from quarter to quarter. So that's actually not that surprising. Contribute to. Okay, let's check what they're doing. 2025 and 2026 backlog. Okay, so they're separating it, but overall pipeline foresees needs to be close to fill gap between backlog and 2025 outlook of 5 till 10% revenue decline. Okay, so I assume these are 100. That's 90. 99, 100 million is the backlog. Yeah, okay, you can see it here. 100 million is the backlog, so actually it's truly increasing. Yeah, that's the case. But of course it must increase on a certain level. Part of it again is already addressed to 2026. 150. Pipeline of larger number of deals in small to medium-sized utility scale project range. Yeah, okay. However, I have as well the section for the backlog, as I mentioned at the beginning of the stream. So 2025 backlog is 86.7.5, and overall the backlog is now 100 million. Hey, but that's good. That is good. It's hard for me to judge about it, and revenue is more important. I mean, here that are the future revenue streams, but these are the revenue streams now, and as well the outlook is for me more important basically than the backlog right now. But it's great to see that it's looking fine. It's looking quite great. And they're stating, okay, for 2025 they will very likely cover the gap with a small revenue decline. Okay, so they expect really a lower revenue in the energy storage space. Yeah, okay. That's obviously not that nice, obviously. But okay, however, it is how it is. Let's check one time the adjust. Okay, let's go to the financials. Adjusted, or let's start on the top side on the cover page. One moment. Adjusted EBITDA, is it stated somewhere? Okay. Revenue amounted to 80. Okay. Just EBITDA margin was 5.8%. Okay, but we need to go down, I assume. So many information, but that's great to see. Adjusted EBITDA, here we got it. 24, it's 28.5 million. 28.5 million. Okay, I hope you can see it. Wait, I need to. Here it is, a bit more to the right. Okay, it looks like this, I think. Yeah, that's working out. That's working out. Okay, so you can see 8 million for Q4. I expected 3 million, or 3 million was at least the target, what I wanted to see. And so, I mean, the full year expectations was 24 million euros. Why? Because they stated a gross margin of 5%, adjusted EBITDA margin, not gross margin, adjusted EBITDA margin of 5%. That's thereof when you multiply it with the revenue, resulting 5%, resulting 24 million. So, but now overall we're talking about 29 million. So that's actually quite surprising. Let's see what they are stating. Lower end of the updated, lower end, we discussed it already. Gross margin was as well lower, that's as well not that surprising. We have here the moisture issue, so with liquid basically, so inside of the substations, that costs money to basically solve it and correct or adjust the existing already installed substations and making sure that the future ones getting improved. Shift from private domain substation to grid operators. Okay. Because I assume large deals, and that's great to see that the demand is rising here. And on the other hand, framework agreements, larger providers have more negotiation power. And so it's not that surprising at the end that margins getting lower. Warranty provision for EV chargers, okay. Timing effect in energy storage solutions, okay. Timing effect means what? Maybe a delay or in terms of installation, this kind of stuff, I assume. And when they reach the milestones for payment, but okay, I don't know. We will see. Adjusted gross margin 28.6%. Adjusted smart moisture issue. We see it here one more time. EV chargers. It's basically a little bit like duplicate, or a part of it is duplicate of the upper stuff. You can see old batteries somehow getting written off, and some further stuff. Personnel costs increased by 27.1%. At the start of 2024, Alfen anticipated faster market growth. Effects of organizational structure will start to show in Q 2025. So basically to pick you up here, they mentioned in terms of the strategy, they will stay continued on all of their product lines, smart grid solutions, energy storage systems, and EV chargers. But they plan to reduce 15% in terms of the staff. And I mean, look, when you check out that's the full year presentation sheet. So actually 1 year ago, and you can see setting the stage for growth. So end of 2023, guys, beginning of 2023. Beginning of 2024, so the Q4 2023 basically results, or full year presentation deck is what you can see here. You can see everything is going well basically, and internationalization, so basically expansion to other markets is online, and key account deals, this framework agreements, all of this looking good, and therefore keeps investing across all business lines. You can see hiring new staff members, new production facilities, and this kind of stuff. So they really push their foot onto the speed pedal, on the gas pedal. Even if it would strategically, it's difficult to nobody has a glass bowl, you know, and knows what the future brings. But in this case, would be more appropriate to stay on the same speed level, or even push a little bit less on the gas pedal. Yeah, but it is how it is, guys. So let's go back and check out what else we can see. But at least there will be some positive impact on the staff structure. And operating expenses increased as well. Yeah, you can see here this SGS stands for Smart Grid Solutions, so substations. They moved to the new headquarters. Non-current assets increased. Okay. Debt is a topic because they should not run out of cash. That's definitely some risk in their situation. As you can see, revenue getting down, profitability is struggling, and the cash position is not that strong. But however, I assume that I can see it here. But you can see that business is working somehow, and they assume, how many people are working there? Something like 800 or something like this, 800, 900, or something, let's say between 700 and 900, and doesn't seem that large to some countries, to some companies, especially large cap companies. But look, guys, that's a small cap company, we should not forget it. And there are not that many unlimited companies like this in Netherlands, for instance. Netherlands have good culture of business in my perspective, and good work ethic as far as I experienced it in the past. But look, if there's a company like this existing, you want to keep it when you are the state, for instance, when you are the banks and this kind of stuff. So it brings money, it brings tax and this kind of stuff. And so when people are getting unemployment, that's never very good. So I think different kind of parties are interested that Alfen business goes on. And it can sometimes go down quicker than expected. But on the other hand, I assume that Alfen will stay and will survive, let's say it like this, not going bankrupt that soon, at least, hopefully, but that is what I see. You see a positive free cash flow. In 2023 it was even a negative one, now it's a positive one. It's in line with the guidance. So the debt position improved. They have, maybe, and that is my big bet, why I'm still invested in this company, even if it costs me so much nerves and headaches, brings a lot of headaches in the past, for me at least, and I want to sell it so often already. And actually I did the complete opposite. I purchased further shares. I'm not sure if that was that brilliant or not, that smart or not, but they invested in the new facilities. Okay, they made a mistake, they hired too much, because they thought, okay, we need to be prepared for the future, demand is increasing, all of this kind of stuff. And maybe now they have a good level of everything. Now they good mode, good tempo, good routine in everything. The level, the balance is right in terms how they work. They had those issues with the substations, some write-offs in terms of EV chargers, and now they are in good shape. Who knows? Hard to tell for me. And I'm already in my mind thinking about the outlook, what we have seen when we start the stream and when we open first time the presentation. I'm very curious to figure out, okay, what is exactly going on in the outlook, because I don't want to cover now all those financial details. I'm not that heavily interested. During the stream later, and I will check them out by myself, but now I don't want to set this focus too much. But I for sure want to check the outlook. And look, we already have seen that there will be there's a risk for sure that we're talking about a lower revenue in 2025 compared to 2024. But on the other hand, again, they missed a lot of times guidance and outlooks, and maybe they miss it, and this time they put it too down and they achieve kind of a surprise. Yeah, I mean they don't know what will happen with the demand in terms of EV chargers. Very difficult to calculate. Of again, larger companies like Enphase somehow getting surprised with market developments, and of course a lot of investors as well. And in this regard, Alfen is still quite stable. We shouldn't forget. Primarily driven by movements in inventories. Okay. Inventories I will not cover now. We have successfully executed our second half 2024 cost-saving program, reducing operational and labor costs by 13.1 million. That's nice to see. External direct labor. Especially you can see the external direct labor is lower, or will be lower basically for 2025 if I see it correctly. Yeah, you can see 12 million euros, only a third right now. The regular stuff is a little bit lower. Other OPEX and is decreasing as well. That's nice to see. So I assume that overall they're getting just a bit more efficient. Expect a net impact of savings program. Okay, 20.3 million. That's nice to see. I mean, and they ask external consultancy agency for support, and I assume they really try to grab the steering wheel of the company and try to maneuver through the situation. I mean, we should not lie in our own faces. You know, we need to be honest to ourselves. Yeah, and for me, Alfen, even if it's not the most heavy turnaround story in the world, but it is for sure a turnaround story. Yeah, and or at least it needs to somehow achieve a turnaround. And achieving a turnaround as a company is not that easy, especially when you are confronted or affected by so many external effects like external supply. Luckily, not that much on exchange rate, currency exchange rates. That's a very, very low impact, even if there is in general any impact. But very strong impact in terms of interest rate. And yes, in Europe, it's getting still lower and lower, and that's great to see. Not like in the US, because just in general the economy here is not that stable, like for instance in the US, and that's at least something positive. And again, we're talking about at least in terms of substations and in terms of energy storage systems on very heavy capital intense products. Yeah, so those customers, when we talk about wind farms and then purchasing additionally some storage systems, for instance, or substations, all of this is leveraged with debt money a lot of times. Yeah, and if it's very difficult to leverage those, then products getting postponed, or getting cancelled, or getting realized in a smaller scale. And the same in the private sector when we talk about EV chargers. EV chargers are 100% affected by the sales in terms of EVs. And if, for instance, in Germany, I'm not sure if the number is right, but I think 20 or 30% lower sales of EVs compared 2024 compared to 2023. And Germany is a large EV market or car market, the largest one by far in Europe. Yeah. So you can imagine what is the result of it and how strong the customers of Alfen will purchase EV chargers. It's obvious, but this as well can turn in the opposite side. And yes, unfortunately, Alfen is very heavily impacted by those kind of aspects which they can't affect. Yeah, they just need to rely on. But now let's get in a recap. Okay, a recap. Let's see what Alfen is telling us. Alfen conducted a strategy review and organizational right sizing in direct response to charging market conditions. Okay. Yeah, you can see it. Rapidly decreasing battery prices made ESS customers postpone to sign deals. Okay, crazy. So because the customers basically, or the prospects, are staying patient and waiting for lower prices because they see they're getting lower. Crazy. Okay, I hope on the other hand that development and production costs of the ESS line getting cheaper as well. So then it's in shape, in balance. If not, it's a minus for the vendors like Alfen. Yeah, we can see subsidies. We talked about this a moment ago. Basically, we have this moisture issue in substations, and this yeah, it's crazy. Alfen issued a profit warning in June and took immediate action, strategy review, and organization resizing. Okay, one more time. Last time for today, I assume. Here, this was this news, this guidance adjustment, reassessment, midterm objectives. I'm very interested to see what's going on here. And then we have another update here. So check it out by yourself if you are interested. If you are an investor, for sure you should check it out if you don't know it yet. But if you are interested in becoming an investor, which I would recommend to very strongly think about. But yes, there is some potential existing from my perspective, but as well, for sure, some strong risk. So make your own decision very carefully. However, yeah, making sure you know this kind of past and history, and you can maybe learn out for the future of it. Okay, strategy review, reassess the core competitive advantages, combination market attractiveness, Alfen's competitive position. Yeah, okay. Outcome further focus on product market combinations. And I mean, there was the risk that they tell, look guys, we will leave half of the markets, half of the countries we are active in. Or look guys, we will not produce and sell or supply any more energy storage systems because the margins are too low. There was the risk that this the outcome, or maybe the chance as well, yeah, to stay a little bit more lean and more efficient as a company overall, low cost, higher margins, whatsoever. But they decide to really stay on track with all of this, and I hope they did this with good reason. And yeah, as an investor, I need to trust them, honestly. That's the other side. Organization right sizing to new level of market growth, new strategy, making it more effective, targeting high single-digit adjusted EBITDA margin. Yeah, okay. I mean, this year, what did they achieve? I can't see it. On average, hard to say, but on average, it was more than 20%, huh? Right? Wait. Adjusted EBITDA margin. Let's check one more time. What was the adjusted EBITDA margin? Okay, 5.8%. 5.8%, if I'm not mistaken. And they go through a high single-digit one, so already looking a little bit more comfortable into the future. Outcome of a new organization in December and reduce expected costs. Okay, we got this already. Oh no, there's so much. Let me quickly check if there are some. No, I check later the comments as always. Sorry guys for not interacting that much with you. I mean, regularly not that many watching with me to gather the results of Alfen. It's just not that popular, and that's absolutely okay for me. However, but maybe someone of you added a comment in the section. If not, and someone is watching right now, thank you very much for joining, and feel free to leave a comment. Leave a comment under the stream, but more like here on the chat, and I can reply on it in a moment. Has unique business model based on 3 business lines. It's competitive, and it's a big call. It's a big call, and that's the only reason why I'm not covering only the big numbers, but because of those information. I mean, it's the full year information that's getting provided, but more important, and Alfen most of the time not providing that much insights, but more crucial in this regard is because of this paths and these challenges, and that today is the day and tomorrow in the call as well, where they give us information what will bring the future and how they basically adjust the direction of the company, and if they adjust it somehow. Right now I see that some issues they solved, and they make sure they're not running out of financial money, and they make sure to achieve a cost reduction. That is what I can see right now. Not anything like other business lines or something like this, or reducing business lines. Leveraging, okay. Consultative selling, okay. Deep grid understanding, whatever this means, but I like it because if that means deep grid means, for instance, even providing in more countries or even better substation solutions, I would love to see it, because I'm a big fan of substations actually, because it feels so stable, it's still growing, the demand is increasing everywhere, basically in the world, because of all of the electrical powered solutions nowadays, and this data centers and all this kind of stuff. You know it better than I, very likely. So they see synergies in their product lines. That is for me as well, again, one of the investment cases. I mean, I like to be invested in a company in Europe, and I like to invest in a company in Europe which is really touching the flavor of the nowadays of this time. And I think sustainability is a big aspect. There's no way going back, especially for Europe, and at least I hope. I mean, governments, political setups and parties who are involved in the governments is changing a bit, but elections, the outcome of elections, basically, Germany it is the week and after next weekend, I think, is elections here in Germany. So let's see what will be the outcome there as well. Maybe it's not that good for sustainability, the sustainable sector, but let's see. Or renewable energy sector, this is how he called us. Case for change. Why do we update our strategy? Pace of technology and regulatory change, this put pressure on growth. Secondly, after years of fast growth, Alfen needs to be streamlined for future success. I'm sharing this, but I don't see that much change in the strategy, honestly. But maybe that's my problem, and maybe it's the amount of details which make a difference. Who knows? Strength wisely reducing costs through less internal complexity. Yes. Focused business line strategy. Alfen will focus on product market combinations aligned with its competitive advantages. Smart grid solutions, complex mid-scale energy storage solutions, complex mid-scale, okay, and the public business and home cooperative, EV charging markets and core growth markets. Okay. Look, that is something. That is the first thing. They really set the focus on the big four, let's say it like this. Like in the consultancy space, there are as well the big four, like McKinsey and this stuff, Boston Consulting, KPMG, or I don't know. Okay, you know maybe as well better. But however, they're focusing the big four countries and the Nordics, because Nordics, they're already providing substations there. They have a strong demand in terms of EV charger solutions. The coverage of electrical vehicles is very strong. Look, and I want to show you, where can I see it? Again, that's the full year presentation 1 year ago, so for 2023. And you can see this internationalization was a big thing. You can see how they wanted to expand and what kind of markets they have been active. Blue One, other European countries, Alfen products installed, and you can see a lot of Eastern Europe, for instance, Balticum and this kind of stuff, and now UK, and now it seems focused Nordic. What did I mention? France, Germany, Belgium, and Germany, France, and the Netherlands, of course. And of course the Netherlands. Yeah, so really comparing it to here, like Spain, like Italy, like UK, it seems like they don't see that much potential. Or I assume maybe it's a little bit more expensive to ship the stuff there, install it, maintain it, whatever. I think there are good reasons for doing it actually, and I like to see it. I like to see it actually. I think that maybe that these are the gold nuggets, yeah, let's go for it. Let's go for it. That's good. That is what I like to see. Let's see how the market reacts to it, but that is what I love to see. Organizational change. Alfen has further optimized its organization by using 5 key effectiveness and efficiency levers, doing less, fewer duplications, doing... Okay. Let's don't waste any time. 2025 outlook. Media. Now it's getting interesting, boys and girls, gents and ladies and guys. The renewed strategy will enable. Okay. Okay. Yeah, and again, okay, single digit adjusted EBITDA margin. All right. But this range of 60 million and mid of 475 million euros is lower than 2024. I don't like this at all. I mean, they want to get more efficient, I assume. I mean, obviously, I don't assume, they mention it by themselves. And if there's need, they do this based on the revenue outcome. Yeah. And again, you look, guys, you can't getting more efficient and you leave markets and you can still achieve the same revenue. I mean, yes, you can, everything is possible basically, but that's difficult when they're not setting that much focus on Spain, on Italy, on whatever, Croatia, Bulgaria, everywhere where they have been present, and very likely they had business partners like distributors who sold for them the goods, installed the goods, all this kind of stuff. They need to have their service structure, infrastructure as well, all those kind of aspects. If they leave this behind, they have less costs, but on the other hand as well, obviously lower sales, lower revenue and turnover streams. And if I consider this, then I can live very likely with the revenue. Yeah, I mean, if they really stick to this, setting the focus here, let's go, guys, and getting efficient. And then later on, if there is the need, we can start again to expand more heavily. Then it's fine for me. If it's not the case, they're still active in all those markets and they're basically just losing market share or selling less in every market they already present in. I don't like this outlook at all. But that is something I didn't have in my mind an hour ago. So nice to see. Am I still live actually? I hope. Would be good. Wait one moment, let me check. Let me check if that's the case. Okay, it looks good, I think. Looks good. Yeah, nice. All good. Okay, let's go back. Sharing the stream. Okay. However, not that crazy. Maybe we calculate quickly what this means for the revenue year on year. Let's again, 488 is what they achieve right now. 475 is what they expect. And to achieve as the mid target next year, hopefully I calculated correctly. I'm sometimes so bad with this. So it's a minus. One moment. So minus, let's keep it simple, minus 3% next year target, revenue target. Oh, I missed to grant profit rating. And profit rating, I actually give it a positive one because it's higher than expected, at least based on their based on their adjusted guidance, adjusted outlook. Okay, however, coming back, okay, minus 3% year on year, but again, keep in mind, hopefully it's getting more effective, it's efficient, and yes, it's maybe another gap year where they somehow make sure that everything is in good shape, they achieve a strong and stable fundament, and they can re-accelerate. Yeah. However, let's see. I mean, for me, it's as well crazy to stay patient. This company, luckily, other companies I'm invested in, like Kim's Nurse, is developing in the right direction, because otherwise the pain would be really hard. Okay, prices of growth. What will the focus of implementation be in coming quarters? Q1 25 is centered on activating Alfen's strategy around its core competencies to be a fit for focused profitable growth from Q2 2024 onwards, potential market expansion per 2027. Wait, I missed completely the midterm guidance. 5 to 10% year-on-year growth, year-on-year improvement to low double-digit adjusted EBITDA margin, and capex below 4% of revenue. Okay, here we got it, and now we can enter it finally in our sheet. Let's try to achieve it. Here it is. And so you can see, I mean, originally in 2020, as 1 year ago, the midterm objective for 2027, those have been the targets. Yeah. So 1 billion revenue, if I'm not mistaken. Yeah. Maybe I'm mistaken, but I expect they targeting 1 billion euro revenue per year, if I'm not mistaken. Now they're targeting for 2027 10% per year till 2027. Yeah. So 5 till 10%, so it's 7.5. Yeah. So it's calculated. Taking the 488. Good. Yeah. It's like in college. I'm not sure if I can remember it anymore. Oh God. Is it correctly? Okay, so 2 times. Okay, wait. 1 time is like, should be this. Is it correctly? Okay. 2 times is 2026. 3 times 2027. Okay, so that's the. I hope I am not on the wrong path. Yeah. But yeah, it's millions. Sorry, it's million. You know it. Yeah. So 606 million is the target for 2027. That's the target. Yeah. Don't get confused, please, guys. Yeah. Okay. Yeah. So that's obviously quite low. Again, I'm not sure about this, but however, then they mentioned year-on-year improvement to low double-digit adjusted EBITDA margin. Okay, low double. Let's say 12.5%. I think that's low double, if you ask me. Okay, and then max capex of revenue, it was before 5%. No, that's the first positive one, because it's now on 4%. Okay, here we go. So that's worse, and that's actually positive. Yeah. So I take the chance and mark it positive. And yeah, guys, midterm objectives. Wait. That I didn't shake my head because of a neutral rating, because of a negative rating. So wait, can you see it? Hopefully. Oh, I missed to share it. Now you can see it. Sorry, guys, but you can see before in 1 year ago, 2027 objective in terms of sales was 1 billion euros. If I'm not mistaken, now it's just 605. So really small growth. Or let's say 606. In terms of adjusted EBITDA margin, before 17.5, now low double digit, so I assume something like 12.5%. And capex of revenue before 5% and now 4%, so that's actually positive capital expenditure. And so, yeah, I need to rate it negative. I didn't expect something big, and I mean, how could they go out now and announce, look guys, we will still make 900 million euros happen in 2027. Nobody would believe anyway, you know? And so of course they hopefully tackling a bit the targets from a lower perspective, from the lower end, and surprise maybe. But yeah, we will see, but that's not that nice. But I think there was further information. Okay, phase of growth. Again, Q1 25 is centered on activities around strategy, profitable growth from Q2 2025, potential market expansion per 2027. Yeah, so if I understand correctly, they're not stating it as a gap year, more like a gap quarter, like third quarter is. They will dig the fundament in Q1, go on with digging the fundament in Q1, and then everything should be in shape. I will set up an energy storage solution provider of Syn Lex and smart grids. Yeah, okay. Okay, I can check it out by yourself. I will do it as well later. Okay. Operational synergy is only independent player active. Okay. Yeah, obviously that's the case, and that is what I 100% understand why they don't want to leave any of the business lines. They have this kind of synergies, and they already proved that the synergies are existing. Yeah, someone who building a charger station, for instance, they need chargers and they need substations. Yeah, or someone who, as a wind farm owner, when you want to connect the energy storage systems and the wind turbines to the grid, you need substations and transport the power to other locations. Yeah, these substations are for sure existing. Yeah, no doubt about it. Cross-selling, upselling, blah. Okay. On context to market expectations. Our expectations deviate from public available market data. We base our expectations deviate. Conversation with customers, order intake, run rates, historic changes, and expect profits. Profits of publicly available market. Yeah, because that's nice to see or nice to hear. I hope that's the case. But my expectation was always, again, let's step to the past the thing, and they always mentioned like with some public information like this is the CAGR of smart grid, that's the CAGR of EV, that's the CAGR of energy storage solutions. Just for your information, you can see how strong the CAGR is in Italy, in United Kingdom, and in Iberia and Portugal, and now it seems like they're leaving it behind. Actually, they don't want to set the high focus on it anymore. Who knows? But yes, so they used a lot of public accessible data in my perspective. But yeah, okay. Maybe I'm interpreting it wrong. Yeah, it might be the case. Alfen to profit from volume growth of grid operators, but is cautious due to the execution to constraints and grid congestion in private domain. Okay. Yeah, Stedin is another grid operator in the Netherlands, and you can see here. Because of the Dutch solar demand is getting lower, private domain is expected to be affected by this as well. Not 0%, but it's nice to see that they separate and they take or they grant us more insights how they think. That is what I love to see. Leander, of course, is another grid operator too. But that's That's nice to see. That's nice to see. And maybe again, interest rates getting lower and dropping. Maybe people start to purchase more and more solar panels, this kind of stuff, and it's good for the demand of smart grid solutions. So now we're talking about EVs. Alfen backs the profile from mid to long-term market growth while being less optimistic in the short term. And I like that they are less optimistic because in the past my view on this was they have been always very optimistic, too optimistic from my perspective in any direction, and I hope that they are now more realistic. Between 10%, okay, that exactly are. No, it's not. I mean, substation looking good for them, more or less, I assume. EVs looking good, but the banger will come in a moment with energy storage systems, which looks, I assume, expectations are very low. Okay. I mean, it's cautious after resales stagnated in 24, but optimistic on mid and long-term growth rates. Yes. Yeah, we can see it here. I told something like 20 to 30%, it's 27%. And yes, Nordics working fine, UK is working well, all good. The home market, Netherlands, you can see here, major markets. But Germany as the car market, not just because I'm from Germany, obviously, but it's a strong market, a huge market actually, at least in Europe. And people are willing to spend here a lot of money compared to their salary, yearly salary into cars. And yeah, if this market is struggling and tumbling, then of course it's not good for Europe. Bloomberg forecasts 30% growth in EV sales for Europe. Okay, let's see. And then, like, you see it here. Alfen cautious with short-term EV growth figures, but Bloomberg actually is very optimistic. Yeah, I like it. That is what I like. More down to earth is always good. Context. Okay, it's now energy storage systems. I remains cautious based on current market dynamics, but still foresees double-digit volume growth. Okay, it doesn't look that bad actually. I mean, compared to the past, the growth was sick and crazy, as you can see here. And the growth rates which have been achieved by Alfen was even way higher. It was a 3-digit number, I think 2 times or something like this, 3-digit number. You can see it. Where you can see it. EV growth. Here. Look. This is 2022. 2022 ESS growth 450%. 2023 ESS growth 180%, and yeah, now 47% drop. However, like to see that they're still kind of optimistic. I expected way worse, honestly. Mid-scale base while volume growth is highest in mega. And you can see here risk appetite by customers, banks, complexity, and placed in mid-scale. You can and you can see they're focusing now mid-scale energy storage solution systems. So I assume this example here, this one is for sure a large scale. I would at least frame it as this from my perspective. And new ones, more lower sized. I mean, a lot of, for instance, wind farms in Netherlands have 5 till 10 wind turbines, 5 till 10. And for those kind of projects, you don't need this kind of energy storage systems. Same in Germany, actually. I think Germany's average size of a wind farm is something like 5 turbines. Yeah. Okay. Energy storage systems price declines expected to slow down after experiencing a sharp decline of 40% during 2024. Wow. Crazy. 40% drop. Crazy. You can see it actually increased. Why? Very likely because of the demand. Yeah. The existing volume was not that strong, and the demand was larger than the the available storage systems. Then of course the prices can get increased and now lowering. But however, you need to consider it increased 2022 and then dropped. If you would mark it straight, it would be still quite a straight line, This sharp drop is resulting because of the increase in these 2 years, basically 1-2 years. But the decline is still more or less stable, Okay, let's see. But I'm interested what they are stating. Market research do not expect same downward pressure on energy storage systems. Okay, that's nice to hear. How low should the prices become? You can see it's getting more flattish, the forecast. For customers, benchmark range for and as soon as customers realize, okay, interest rate is fair, key interest rate in Europe is fair, a good level, and prices not getting lower anymore, and even maybe some vendors of the solutions leaving the market, the fittest survive, and maybe Alfen is one of those. I'm not sure in terms of energy storage systems. I'm quite confident and convinced by substations. Substations, I have actually no doubt at all that they have very, very strong positioning in the market. EV chargers, I'm not that 100% sure, but I assume it's looking good. We have seen their leading position, but in terms of energy storage systems, let's see. Between per megawatt. You can see now. They had 126 megawatt hours in this big project. So it was. Why? I can make it in my head, but we can calculate it quickly as well. 126 multiplied with, how much was it? Let's say 80, so 220,000 per megawatt. So that's how much is it? It's this project we have seen in here, Flevobes, what they have accomplished a few weeks ago. It actually almost 28 million revenue. 28 million revenue. That's large chunk of the total. Look, they achieved 124 in the full year, and just one project now, which getting realized in 2025, is roughly 28 million. So very affected by large projects, even though they're not setting the focus on it. It's getting back. Longer duration in hours, additional scope of work for Alfen. Okay. This is to excel on our core strength for steadily reducing internal complexity. And it's just very regular. When you grow that quickly, you need to hire people. You need to expand in any direction, achieving new contracts with partners, with suppliers, all this kind of stuff, expanding to new markets. All of this is not cost efficient. All of this you're losing kind of a control. You're sourcing out this kind of stuff. There is no other choice for most of the companies, and Alfen is for sure the case. And it's just very regular that it's difficult for, let's say, a mid-sized company or a small cap company to manage this. And they didn't manage it perfect, but at least they tried to adjust everything, hopefully successfully. Okay, this is what what I don't want to focus. Alfen will focus within each business line on the market segments aligned with its competitive advantage. And guys, I mean, that looks, oh God, only 7 countries. Only 7 countries, yeah? EU, it's not a country, it's the European Union, yeah? Okay, that's not that new, but again, they want to focus the 4 markets, plus Scandinavia, and with Scandinavia, or Nordic markets, they mean very likely Sweden and Finland, and very likely EV chargers as well, Norway, this kind of stuff I can imagine. However, you can see now 6 countries left, and you think, oh God, the impact on the revenue, but consider that Smart Grid Solutions is Netherlands and Finland. Yeah? All the revenue 2024 result out of those both countries, Netherlands and Finland. The energy storage systems as well. I mean, look, potential was there for UK, for Italy and this kind of stuff, but I assume they are just better connected in the Benelux states, yeah, Netherlands, Belgium, France next to it. It's working well, and maybe even Germany, yeah, maybe in those countries, yeah. I mean, they already realized in Sweden, for instance, battery farms. So I assume they have good reputation, they have references there, they already realized some projects and are connected, and they are just competitive there and don't need to dump prices on a crazy level like in some other markets, or in some markets where, yeah, the projects might be that large that they are not price efficient anymore, not very profitable. The margins are too low because, you need to grant good prices at larger projects, obviously. And EV chargers, same. Again, Germany is this huge market. Netherlands is a good market for EV chargers. France as well, I assume. Not sure what is going on in Belgium, Sweden, Finland. I mean, Sweden and Finland, very likely they use electrical cars a lot. Not sure how large the market is. But at the end, that is the result. And I like to see it. I didn't expect it. That's for me. I already made the turnaround happen during this call because I didn't expect that I will leave this call with kind of a smile. And we are not done yet, but yeah, it looks good. Let's see. Still not sure what is going with this missing EV charging product, what I can't see anymore on the website. But it is how it is. Yeah. Good. Okay. We got this already. They are very project specific, individual customer specific. They understand what they are doing. I like it. Large companies like, for instance, General Electric or Siemens maybe are not that quick in adjusting and being that specific and individual for all the customers, and that might be really some kind of a niche where Alfen can step in and really make good business. Yeah, what they are doing now with Annexus in the Netherlands. But what is going on with? Wait, one moment, please. I need to really quickly check out now. Sorry for this, but I need to check out where is this news? Where is it? They had this. It's not existing anymore about this EV charger system. Crazy. Where is it? Maybe I'm missing it, but they really publicated this EV charger, which was more a squared one. Guys. However, let's go on. Okay, but they have a product line, you can see, ready for public sector, ready for business, ready for home. Home is as well very competitive, and on the other hand, margins are good, I assume. But let's see. And I mean, they cover all the regulations in Germany, in Europe. That's great to see. Best in class service. Yeah, hopefully that's the case. Alfen offers turnkey solutions or turnkey ready solutions configured to customer needs with strong performance guarantees. In terms of the energy stores, yeah, we have this mobile ones. I'm not sure how strong this is impacting the overall results. The mobile solutions, I think the stationary ones are definitely more relevant. Okay, I think. Okay, this kind of stuff. Of course, you need something like this. Doing fewer, flatter. Okay. Update our ambition for 2025. Okay, we covered already. Okay. Down by business line. And I think it's definitely a very favorable situation for Alfen that they have these product types. Again, take a glance, take a view on Enphase with the microinverters, or like solar farms, solar companies. They are that heavily impacted by a low number of products. All here as well, all in the same space more or less, but different customer base, different customer regions, different customer groups, private, publicly, business. This is great that they are this diversified. I love this mix. I love it. And that has something for me. That has something, definitely. Something crispy, something special. Not sure if it's good, but it's special at least. Okay. EV charge decline. Yeah. Okay, all good. It's hard for me to categorize this and judge about it, because at the end, one more time, it's obvious they will leave revenue on the road when they set the focus different and the scope way less wide, way more focused. Not surprising. You can see here, EV chargers, better conditions, efficiency, because of one-time effects of energy storage projects from 2024 will not have some effect in 2025. Okay. Okay, what we else have here? Core assumptions for year. Okay, you can see it here. Okay, so they still think energy storage systems compared to EVs and substations developing great. Price development getting a bit even higher, so they have a good positioning actually. Obviously, when the competition is quite low, but here the prices decrease, honestly. But again, hopefully the cost as well for Alfen. Market share stable, that's nice to see. Net effect on revenue, 5%, 10% growth year on year. Okay, that's a bit awkward if they calculate with... okay, because this has higher impact than the 15%, I understand. So I assume it's actually on the higher end of single-digit growth, because of the impact of energy storage systems, what they are expecting. Gross margins, EV, quite high. Looks good if they can make it happen, something like this. And they get a bit lower and they more or less stable, but a bit lower as well. Okay, then Okay, wait. At least the headlines. Activate strategy into all teams, okay? Into all Alfen teams, focus profitable growth. That is I like. They need to sustain at the end, if they are not existing anymore soon, then it was not worth anything. And profitable market expansion. Let's see. Alfen, power to adapt. Wow, that was a very intense one actually. Especially for Alfen. For instance, for Stoneco, I'm not invested anymore in this Brazilian company, but I think it's a great one actually. It's definitely a good one. But however, I decided to invest a bit different. I took sometimes even way more time because of all those numbers. This time it took just a lot of time because of all those more qualitative than quantitative touched information. But I like it. I like it. I like that they give a lot of color to it at the end. It's not like just, okay, we'll reduce some costs and everything will be fine. I liked this message. I like it very much, actually. Yeah. Maybe there are some details I'm missing. It's always the case that I'm missing some details. I'm just a human. Maybe they tomorrow need to reply on some questions, and there will be a lot, I assume, during the earnings call tomorrow morning, which they have difficulties to answer, or which might leave some concerns at the investors and the analysts. But maybe people like it. Yeah, I mean, the crazy growth story is over, no doubt about it. At least, I mean, based on their low guidance, maybe they will surprise. Maybe they will surprise. Give them a chance to surprise. I think it's just fair to, yeah, at least I see potential they surprise. I see it for sure. I see it. And I see it especially in terms of when they surprise in terms of revenue, then they will surprise maybe as well quite good on the profit side. Yeah. So I see this potential. However, when we talk about today's rating, and I mean the verdict is just about Q4, not full year, you can see that I rated the revenue, and again, yeah, adjusted and quite low outlook, but revenue on neutral scale, profit actually on a positive scale. The backlog looks well, even if it's not covering a full year expectation, but especially with the 86.5 million for 2025, but it looks good in my perspective. So that's greenish as well. And then we have, and that is difficult to say how strong we should consider this, yeah. Margins doesn't have been that positive. However, overall just EBITDA was good. Medium-term objectives are not that great, but something what they might need to do to persist in the future, and maybe they can still surprise, I hope. Difficult. I like what they are doing for the company, but when I think, should I stay as an investor, it's another story, honestly, guys. Difficult thing. Can't say it different. Yeah, but however, this results, let me put it in yellow, in a neutral yellow, because yes, I mean, Q4 was not a bad quarter, for sure not, in my perspective. They made a lot of stuff right. They utilized the time in the right perspective, in the right manner. They have the strategy. They gave us a lot of information about it, and I assume in the annual report even more, and tomorrow in the earnings call even more. So so far so good. But yes, it's not that nice to see when you originally invested into a strong growth story with a lot of profit potential, but more on the revenue side, actually, revenue potential, to see, oh no, that's not the case anymore. It somehow shifted, and that happened, and not sure how strong I should consider this, but for today's rating, I give it at least a neutral one. Green would be too crazy, I think. Green would be too crazy. But for the company, I look positive into the future. And for me as an investor, honestly, hard to say. I'm not sure. I mean, I have good companies. I'm invested in other good companies like HIMS, like New, Grab, SentinelOne, and now gambling.com, my newest investment. I will back as well the earnings in March of gambling.com. And yeah, I mean, I need to stay as well efficient, same like Alfen as an investor. And I think I stay invested. I assume I stay invested. But let's see. I'm not 100% sure. For me, I leave this call with a good feeling, this earnings live stream. Let's see what will bring tomorrow earnings call. What bring the market, how the market will react. For me, it's very difficult to catch if they see it same like me. And I mean, the question is, look, again, good for the company. For me, it looks clearly good and very, it's a very grown up decision what they did, I think, to set in higher focus. They had no other choice, actually. I mean, they need to stay financial stable and don't run out of cash and this kind of stuff, and set in higher focus and still can surprise on the upside. Yeah, that's what we should not forget. But the question is, will all this happen? You know, are they really now? If my feeling is they are a little bit now on the lower end of outlook and expectations. What they're stating, they're a bit sandbagging. I can imagine that's the case, and then they will surprise latest in 2026, latest in 2027. Maybe not in 2025, but let's see, maybe even here in terms of EV chargers, might be a surprise. Yeah, I have high hope for EV chargers. I think substations is a stable business. Energy storage is the opposite. So I expect further eruptions, more likely in a negative direction, but maybe even in the positive one. We will see. But if there are synergies, okay, it's worth to keep it. Okay, not sure about the decision, but they know it way better than I, for sure, 100%. And EV chargers, I see it as well as a very interesting market. Very interesting, high competitiveness, high competition. No doubt about it. A lot of vendors of solutions from all over the globe. Maybe not every one of them have that high reputation. The service infrastructure don't have the software adjustments and cover all the regulations. Who knows? So maybe they are a little bit ahead compared to others. Let's see. I think I stay invested. I assume I stay invested, but no guarantee. And I'm very curious to figure out what tomorrow the market brings. I can't believe it stays at plus minus 0% tomorrow. If I need to make a guess, I would say it's actually the price is rising. Even though the revenue guidance and the margin guidance is that low, I assume that the market, the analysts understand, they trust in the results. But I'm not 100% sure. It already dropped today 6 or 7%. And maybe the revenue guidance for 2025 and 2027 counts more than everything else. Yeah. Okay, let me say it like this. I think the price tomorrow is lower than today. Yeah, I changed my mind. Because I think the short term and the midterm guidance in terms of especially revenue has the most weight in terms of the analysts and the investors who judge about it. But still, I hope for positive surprise. And yeah, I think it's a trustful decision what they did. And again, if they would now mention very high numbers, I'm not sure if anyone would believe them. So it's more fair to lower them, setting a focus, restart the engine, and go straight ahead. Let me quickly check if there are any comments here. They are in. Check news. Positive free cash flow is big. Yeah, that's true. Outlook is terrible, but net debt reduction is a plus. True. Later at the report, there's if you take a look later at the report, there is a note on the new debt facility which states, amongst other, the new debt EBITDA commitment of 3-1. Yeah. Okay. And that's very financial. What TD here in the chat is stating actually. I can just tell that doesn't impact that much for me. Let's see. Again, I expect the price will decrease tomorrow. Already decreased today, decreased tomorrow as well because of the outlook. It's just weighing too heavy and too negatively impacting the thoughts about this company by the market. And I need to think about this as well, but currently I'm a little bit running out of time and I will not do this that soon, and hopefully not losing that much money. But again, maybe I'm wrong and it's actually increasing. Again, I like the message. The question is just if investors like it as well, and if they see the potential that Alfen is surprising and everything else is good shape. However, guys, that's it for today. Just a quick hint into future earnings, live earnings. You can see Alfen we covered already. Next one will be Himsner is not up to date. Actually, it's the 24th of February. So we will go on the 20th with new, if the date is correct. 21st with Grab, 24th with Himsner Hers, and then in March we will go on with SentinelOne in the mid of March at the 14th of March. And I think 1 week later or 2 weeks later, I will cover as well gambling.com. So stay tuned, guys. If you like what you have seen, feel free to like and subscribe to the channel. Every of those likes and subscription counts. I mean, it keeps me motivated, guys. Even though, again, sometimes I'm running privately and business-wise as well out of time, and still try to create content for you. So it keeps me motivated. It's very nice. And yeah, if you like, feel free to follow Sense of Capital on YouTube here, but as well on my further social media accounts, Sense of Capital on X, former Twitter, or on Instagram, A Sense of Capital as well. Guys, that's it of today. I hope I didn't miss anything. I know it was a long stream. Time to eat some dinner and go to sleep. Appreciate all of you. Take care of yourself. That's most important of all. Staying healthy. Make sure you do your own due diligence and evaluation and decisions as well. It's your own money, guys. I'm not responsible for your decisions. And yeah, cross my fingers that all your investments take off like a rocket. Guys, that's it for today. See you next time. Cheers. A Sense of Capital.